Steve, I know you're liking what you see here. Investors seem a little lukewarm. What are you thinking?
Well, look, it's great news for Tesla and Tesla investors. Everybody thought it's going to be a soft quarter. We knew there were supply chain issues combined with COVID closing the China facility for 22 days. And we saw 254,000 units delivered, 50,000 increase year over year. That's 40% growth. But the big surprise was revenue and profitability. They hit 16.93 billion. That's 40% year over year growth. But the biggest news is largest car deliveries in history in June, which says they're really ramping up to the back end of the year. I think they're on track to deliver 340,000 units in Q3. I think they're going to hit 500,000 in Q4. If they do that, it'll be closer to 50 to 60% growth. Keep in mind, analysts were predicting profitability of about $1.81. They hit $2.27. So they're on track for record deliveries, record profits. Simply put, Tesla's got manufacturing capability and supply chain relationships no one else has. Someday, they may not be king of the hill, but for the next year or two, they're looking awful strong.
Now, they didn't change their production forecast. They've made 564,000 vehicles so far this year. They say they'll make 1.5 million. Can they really make twice as many vehicles as they made in the first half of the year and the second half of the year?
Without a doubt, and here's why. Most of the other car companies, General Motors, Ford, they have one electric plant that's going online, maybe another one in 2 or 3 years. Tesla now has 4 plants up and running in California, Austin, Shanghai, and Berlin, and all 4 are running. Austin and Berlin are going to be pumping into big numbers by the tail end of the year. But that's only part of the story. The other key part that investors should understand is the biggest component in electric cars is the battery. Tesla was the first to bring battery production in-house. With their new 4680 technology, they appear to be the technology leader. They're taking the cost curve batteries down faster than anybody else. And on top of that, they're the leaders of providing what's called OTA, or over-the-air software services, that are dropping bigger profits to the bottom line. And again, the big story is profitability was way beyond what analysts saw. And I know a lot of people say, this Tesla stock price is crazy. This is an anomaly at how capital markets work. But the fact is, if you're growing at 50% a year from these big numbers, 53.6 billion to what I think is going to be 86 billion, and you're more profitable than any other competitor in the market, you're going to have a share price that's the envy of the industry.
Big story just crossed from our Bloomberg Autos team, including our own at Ludlow, that Ford is planning to cut 8,000 jobs out of the gas-powered side of the business, in part to fund the EV side of the business. And look, Jim Farley's been very serious about taking on Tesla and also his admiration for Tesla. How well positioned is Tesla compared to Ford, compared to Rivian and Lucid?
Look, Americans want to know how well GM and Ford and Lucid and Rivian are doing, but to be honest, they're behind. They came late to the game. They should have started years ago. Keep in mind, General Motors has been making electric cars for 11 years now, and they were only able to make 25,000 last year compared to Tesla's 925,000. So they've got a long way to go. They need to kick it into higher gear. That having been said, Rivian makes a great truck, but they too are laying people off. They've taken their production numbers down to 25,000. Well, Tesla's ramping their predictions up to 1.5 million. The real people to look at are Volkswagen. They saw the writing on the wall. Herbert Diess has been a leader in the sector. He took battery production in-house early with Northvolt. They've got deep pockets, factories on multiple continents, and then there's the Chinese. Most Americans have never heard of a Chinese auto company, but know this: BYD, Li Peng, XPeng, and others are going to, Li Auto and XPeng are going to be coming to market 23, 24. Here's why they're tough. One, they're moving faster than virtually any other auto company except Tesla. Two, the Chinese are really subsidizing battery and auto costs. Three, they make pretty darn good cars. So expect the global competition. It's good for the consumer, but there's going to be a shakeout here. 30 new electric vehicle companies have come into the market the last 24 months. We may be heading into a recession. More cars, fewer buyers. We'll see who ends up on top, but keep an eye on Tesla, Volkswagen, and the Chinese.
But is the China problem going to go away? I mean, you've still got this 21-day lockdown, quarantine, in Shanghai, and you just got the unpredictability of an ongoing pandemic where the Chinese government could once again crack down and make production there difficult.
Well, look, there are two big China issues out there. One is the COVID one. And what the Chinese do that others just can't for labor law reasons is the Chinese bring the entire workforce, 8,000 people in-house, and they will sequester them for weeks at a time so they don't get exposed. So I think the COVID issue gets solved. The bigger issue is the long-term geopolitical issue. Is Xi Jinping, who was just reconfirmed as the new chairman of China, has said he intends to reunify or invade Taiwan at some point. If you ever see something like that happen, China has a huge part of its production capacity Tesla has in China. So there's a lot of issues to solve for, but right now, what investors need to look at, who's selling the most and who's growing the fast, the answer to that question is Tesla. Who's getting the smartest and bringing battery costs down and doing more, selling more over-the-air software services? The answer to that's Tesla. But these aren't big secrets. Volkswagen, Chinese, others will catch up. It's going to be a question of who's fleetest of foot. Time to buckle up.
How big a problem is the Twitter saga? Doesn't seem like Twitter's going to let this go away, and obviously Tesla investors haven't been necessarily pleased about the commitments Elon Musk made. Now he's trying to pull out of them. What do you think?
Yeah, look, Tesla and Elon are a master at making great cars. I hope they stay focused on that. I think Twitter's been a diversion, and I think the more they can stay focused on executing, whoever wins the electric car race is going to own a 50-year franchise. So you're going to need to keep your eye on the ball. Tesla's sitting pretty now, but a lot of serious people are coming after you. So we'll have to be on our toes, and I hope Tesla's up to the task. I want to see an American company win.